Hey everybody, Boris, BK Force. Welcome to the weekly technicals for the euro dollar, dollar yen, and pound dollar, the majors for Feb 26, March 2nd of 2018. More dollar rally is the question of the week. We had a mild dollar rally across the board last week, but it kind of petered out. And the big question this week is we're going to get any kind of continuation. There isn't much on the economic calendar, so whatever rally we're going to get is going to have to come from external events, possibly the bond market, possibly the testimony of Jerome Powell, the new Fed chairman, in front of Congress. So we'll have to see exactly what motivating factors, what kind of catalysts we have in front of us. For now, though, the market is kind of placid, and if nothing else, the dollar has certainly bottomed out and stabilized over the last couple of weeks. The levels have moved in the favor of the dollar across the board. So on the euro, we're now down to 25, with support now coming in at 22. And as a matter of fact, we're sort of under 23 as we close out the week. With dollar yen, we probed the 107, almost went to the 108, and then kind of died right there and then came right back underneath it. But still, the 105.50 is the key support here. And as long as that holds, that sort of is the reference point for a bottom in dollar yen for the time being. And pound dollar, continuous failure of lower highs, with 140 now the key resistance, and support now comes in at 138. Looking at the calendar, not much on the event risk at all this week in the major side. We have new home sales on the U.S. side, bunch of second-tier data out of Europe. We have consumer confidence data out of the U.S. Then we have durable goods on Wednesday. GDP out of Wednesday. This will be interesting. This is the second revision of fourth quarter GDP, and it's coming in at 2.6 versus 2.5. None of it anywhere near the 3% level, which is where everybody wants to see in order for U.S. growth to really provide unadulterated positive view for the dollar. And then as we move off, at the end of the week, we have the starting of the PMI season. We have the PMI manufacturing out of UK. We have the ISM manufacturing out of the US. Both of those really not expected to show much difference. On the PMI manufacturing, I think we have a mildly bearish call on the cable side. On the U.S. manufacturing, nothing. We don't even have a call yet because we have to look and see where Chicago and Philly are going to come in. But nobody's expecting any massive variance in performance. The U.S. economy basically relatively steady this month. And if anything, there is a chance of a decline rather than an increase as far as production goes. And we finish up the week with the University of Michigan sentiment. That's really it. It's a very, very tepid week. The seriously big event of this week for the majors, let me just scroll all the way up here, is the testimony of Jerome Powell in front of Congress. First testimony as the Fed chair comes in at on Wednesday, 10 o'clock New York time. And then we also have actually Theresa May's speech on Friday out of UK, which will be possibly a very big mover depending on what she says about Brexit at that point. But it's really those two key events that are going to be the primary drivers as far as FX goes on the calendar side. Now, as far as extraneous factors in other markets, it's really going to be this. This is the key driver. The U.S. yields on a 10-year. We went all the way up to 294 last week. That gave the dollar a tremendous boost. Came off of it. And now it becomes, I think, a really big question. If yields can re-rally back above 290, expect to see the dollar strength continue. If we start to really go back underneath the 280, very little chance the dollar can strengthen up. As a matter of fact, we should have a nice, strong rebound in the anti-dollar flows. So in many ways, this is the only thing that matters in the currency market, and it's actually the fixed income market. So we're going to be watching that very carefully as we go into next week, because that sort of underpins the trade as we go forward. Now, when you're looking at the euro on a technical basis, you clearly see a clean double top, right? And we saw this was a great signal last week for a turn in the euro. We basically said that the euro was just ripe for a downturn. It gave a beautiful signal end of the week, and of course the rest of the week we just spent our whole week distributing to the downside. We have, however, found a very decent amount of support here at this 23. Every time we're bumping below the 23 level, they're finding buyers. So really the key thing here now becomes 2250, 2200. 2200 now becomes the very much next level. That's the breakout level we had before, and that would make it perfectly symmetrical for us to distribute all the way down there. If we get there, it's going to depend in quite a lot of extent to how well U.S. yields do and how hawkish Mr. Powell is in front of the testimony. But overall, euro looks to be one of the weakest against the dollar technically, and certainly has scope now for further downside action towards the 22s as we go forward. Yen, I think, just really frustrated a lot of bulls. Everybody would look at this as a key breakout moment, and yet right at that key point at 107.75, we just completely reversed and knocked ourselves down. What's frustrating or interesting, or whichever way you want to look at it, is about the yen is the fact that it just seems to find any excuse to fall down. So when yields go up, it really doesn't rally. But more importantly, when equities go down, it really falls on risk aversion. And that seems to be the key thing. If we get more risk aversion flows, then certainly expect dollar yen to come back and retest the 105.50s. Overall, there's very little evidence here that the selling has kind of stopped. It's very best you could say it's stabilized for the near term. And for now, as long as we hold this level to the upside, very little risk to try to play this bottom in case it does stabilize. But it's by no means a slam dunk. It looks very, very much like a tenuous proposition that could break ourselves down to the 105.50. So while the risk is small, the certainty is even smaller that it's going to hold, I think. And we'll have to see what Mr. Powell says and anybody else. Mr. Powell, I have a feeling, is going to be more cautious than aggressive, simply because I don't think he really wants to spook the markets any more than they've already been spooked. And therefore, that's likely to note that dollar yen could retest its 105.50 lows as the week progresses. Now, cable, very much its own story. What's interesting about cable as far as technicals go is you see a series of failed highs, right? Lower high, lower high, lower high, which is right here. At the same time, what makes the picture much more complicated is the fact that you see here a series of higher lows. It's really coming to a head here as to which way we go, whether we break to the upside, to the downside. And I think this could be the week that where the rubber hits the road, where we could really get a good idea if cable indeed is a trade to rally back up to the 42s, or if we fail over here, the break of the 39s really opens up the full run through the 138s. And at that point, it really opens up the run all the way down to 136s. A lot of it is contingent on Brexit, UK economy. It's interesting to see, how the reaction of BOE has been. BOE has tried to essentially walk it both ways by saying they're going to raise rates, but then they're not going to do anything else beyond that. And so far, the market is just kind of in a wait-and-see mode. Mostly, it's really all about Brexit. Mostly, it's really all about what kind of progress they can make in negotiations, whether there's some sort of a deal that's on the table, or whether this is going to become a cold, hard Brexit, at which point I really expect cable to begin to crush all the way to the downside. So a lot of this rests in how the structure plays itself out over the next couple of days. Convincing break above the 140s certainly notes that there's a potential here for a 142 run. On the other hand, we start kind of drifting below the 39s. As a matter of fact, if we just basically take out the 39s, that's a much more negative construct, and it opens up a run all the way down to 136s as the week progresses. So that's how the majors shape up. Wish you guys the best luck, the best trading. Boris, over and out.